Hello everyone, my name is Majid Rahimi and you're watching part 14 of our classical technical analysis course. This session is about support and resistance. I promise most of you would hear some new points about these very important concepts of technical analysis. So stay with us in this video. You can also start watching the whole course by clicking here and start from first video of this course. Don't forget to click on subscribe button and the notification bell under this video to get notified when I upload new videos. In this video we will first define support and resistance, then we will give some criterions for estimating support and resistance potential. We will talk about some popular misconceptions about support and resistance in the market. Then finally we will look at some important potentially support and resistance levels. Starting with the definition, support is buying, actual or potential, sufficient in volume to halt a downtrend in prices for an appreciable time. And resistance is the opposite. It is selling, actual or potential, sufficient in volume to satisfy all bids and stop prices from going higher for a time. Some words in these definitions look important. Actual or potential. This shows us that we can expect some levels potentially to be support or resistance, and it's an advantage for us in predicting the future movements of price. Sufficient in volume. This shows us that volume is an important point for estimating potential support and resistance zone. From these definitions, we understand that a support level represents a concentration of demand, and a resistance level represents a concentration of supply. By looking at these definitions, we see that the top boundaries of a horizontal congestion price like rectangle or right-angled triangle is a resistance zone, and the lower horizontal boundaries of such patterns are support zones. Support and resistance help us predicting the price movement, as you might have seen before by many expert chart readers. This is possible because turnover in any given issue tends to be concentrated at several price levels, where a large number of shares changed hand in times past. So if we watch the past behavior of our issue, we will see some levels with these characteristics. So we can expect that kind of reaction in the future. Here comes the next point. These critical price levels constantly switch their roles from support to resistance and from resistance to support. Let's see this in a picture. As an example of changing roles for support and resistance, imagine that we're in an uptrend and price is rising. Then it stops somewhere and retraces, and we can see a level which prevented price to go higher. This level showed us a resistance. Price goes up and overcomes this resistance. Now this level is not a resistance anymore, and if price comes down again, this level will act as a support, while we see another level as a resistance. As we might expect, prices react to our support level and goes up again. If it can overcome our new resistance and pass it, it would be our new support level, and we expect it to stop prices from going down. Note that these support and resistance levels are not going to act every time, and they're not a solid, strong wall in front of price movements. But behavior of price in these zones can give us lots of information about next probable movements of price. After understanding support and resistance, it's time to evaluate them and see which potential support and resistance is stronger and demands more notice when that is visible in the chart. For this, I'm providing examples for resistance, but the rules can be extended to supports as well. The first criterion: a single sharp high volume bottom offers somewhat more resistance than a series of bottoms with the same volume spread out in time and with intervening rallies. Look at this picture. This criterion says if we have the same volume at the bottoms which are making these resistances, the left side image represents a stronger resistance level. This happens because most of the volume enters into the share with exit in the subsequent rally in the right picture. The next criterion watches the distance of price decline after resistance. The greater distance of decline will make the resistance stronger. For most of the shares in the stocks market, you can consider a 10% decline for having enough strength for your resistance. But this 10% is not applicable in low-priced stocks and also Forex market. You should practice a lot with real charts to get this amount, and unfortunately there's no mathematical accurate calculations for this. And finally, we consider time for measuring the strength of resistance. As time goes forward, resistance becomes weaker. You cannot expect price to react a resistance level 4 years later, as it could react only 1 year later, for example. We should also watch our price's behavior during the time. Every attack weakens the resistance. For example, in this picture, price will see a great amount of resistance in its first attack. In the second attack, this resistance is much weaker and it's more probable for price to pass it. And most of the times in the third attack, it would pass the resistance. There are some very common misconceptions between technical traders of market about support and resistance. Imagine this part of our chart is in an uptrend. Many traders say that we should consider support level at the bottom of retracement. But as we discussed in this session, the support level would be the previous top, which we should look at the price at this level and break out of this support should have a meaning for us. This happens because of psychological basis of support and resistance concepts. The other thing we want to say in this part is that it's much easier for prices to push up through a former top level than through the resistance set up at the previous volume bottom. This rule works for support in opposite direction as well. It has been proven by statistical studies over lots of markets. There would be little selling in previous top, but most of the time it can only slow down the movement rather than a great amount of retracement. There are some important levels which always have the potential to be support or resistance level. The round figures are probably a good choice for orders to be concentrated there. Numbers like 10, 20, 50, 75, 100 in stocks market and 1.25, for example in Forex market, are of this kind. As chart grows older, new levels establish in it and round figures lose their importance. Historical supports and resistance repeat themselves in chart again and again. Sometimes when we see the price reaction to support or resistance from 10 years ago, it may surprise us. So consider these levels in your analysis. And finally, you can now easily understand how pattern resistance or support works. And there's no need to say about it, except one single point about support or resistance level of symmetrical triangle. In symmetrical triangle, it's the axis of triangle which makes the support or resistance zone. And this zone weakens as time is going forward. Now, after understanding all theories about support and resistance, it's time to see some examples in charts. Well, this video has come to its end. In this video we discussed very important points about support and resistance. Share our videos with anyone you think that might need them. In the next video we will talk about trend lines and channels. Take care of yourself. Thanks for watching. Have a good time and bye.